You just walk past that shiny new apartment building in your neighborhood, the one with darkened windows on half the floors, sitting empty. You got a letter saying your rent's going up another $200 next month. Ever wonder why landlords would rather leave units empty than drop the price? Today I'll explain why empty apartments and rising rent happen at the same time, like you're 5 years old. By the end, you'll understand whether this is just smart business or a broken system squeezing everyone who doesn't own property. Here's the uncomfortable truth most landlords won't say out loud. Those empty units aren't a mistake. They're part of the strategy. Imagine you're selling cookies at a school bake sale. You could sell 10 cookies at $3 each and make 30 bucks, or sell 7 cookies at $5 each and make 35. You make more money with fewer sales. But here's the problem. Once you sell a cookie for $3, every kid knows cookies go for $3. Now it's really hard to charge $5 again. Landlords face the exact same problem with rent and pricing power. They'd rather keep units empty at $2,000 a month than fill every unit at $1,600. The moment they drop the price, it resets what's called the market rate for the whole building. Existing tenants see it when they check comparable apartments online before renewal time. Future tenants check those listings and demand the same deal. The bank that gave the landlord their loan sees it, and suddenly, the whole building is worth less on paper. So they wait it out, pricing for the best tenant who will pay top dollar, not for maximum occupancy. It's like keeping concert tickets expensive, even if some seats stay empty. Now let's talk about what actually drives rent, because it's not just greed in a vacuum. There are 4 big forces pushing prices up, whether landlords are nice people or not. First up, interest rates and mortgage costs keep climbing higher. When the Federal Reserve raises rates, landlords' mortgage payments go up, sometimes by hundreds or thousands per month, and they pass that cost straight to you. Second, property taxes and insurance costs are climbing fast. Both have skyrocketed in many cities over the past few years, sometimes doubling in a single year. Your landlord's insurance bill in Florida or California might have jumped from $8,000 annually to $18,000. And guess who's covering that difference? Third, supply constraints, which just means we're not building enough housing. If your city makes it hard to build new apartments, demand outpaces supply and prices climb. It's like trying to buy Taylor Swift tickets when there are 5,000 seats and 50,000 people want in. And fourth, rent comps, which means landlords look at what nearby buildings charge and price accordingly. If everyone else is charging $2,200 for a 2-bedroom, they'll match or beat it because that's what the market supports. These forces work together, pushing rent higher regardless of what any single landlord wants to charge. Here's where it gets more uncomfortable. You've probably seen comments online saying corporations run the world, and in housing, there's real truth to that. Ownership has consolidated massively over the past decade. Big corporate landlords and investment firms now own huge chunks of rental housing, especially in cities. We're talking companies that own 10,000 units, 50,000 units, sometimes more. And they have something small landlords don't: deep pockets and long time horizons. A mom-and-pop landlord with one building might panic and drop rent to fill units. They need that cash flow to cover their mortgage and property taxes right away. But a corporation managing 10,000 units across multiple cities, they can afford to let 100 units sit empty for months, even a year, if it protects the rent level across their whole portfolio. They're playing chess while small landlords are playing checkers. It's like how Amazon could lose money for years because they had investors willing to wait. Big players can absorb short-term losses that would destroy smaller owners. They use that advantage to keep prices high even when it seems irrational. This matters to you because it means the landlord on the other side of your lease might not even need your rent check this month. They're not desperate to fill the unit. They're strategic about protecting their asset value. Meanwhile, you're desperately searching for anything under $1,800 that doesn't require sharing a bathroom with 3 strangers or commuting 2 hours each way to work. The power dynamic is completely lopsided. You need a place to live right now, and they know it. They can wait for the perfect tenant at the perfect price. It's like playing poker against someone with infinite chips. They can outlast you every single time. And unlike a poker game you can walk away from, you can't just opt out of needing housing. You're forced to play a game where the other side holds all the cards. And here's what makes people really angry about this situation. We're in the middle of a serious housing crisis right now. People are sleeping in cars, crashing on couches, spending 60% of their income on rent. You'd think basic economics would kick in. Too much supply, prices drop, problem solved. But that's not what's happening, because housing isn't treated like a normal market anymore. It's an investment vehicle first and shelter second. Landlords and investment firms aren't just providing housing. They're managing assets that need to appreciate in value, show strong returns to shareholders, and maintain attractive financials for refinancing. Your ability to afford a place to live is secondary to their spreadsheet looking good for investors. When a corporation's quarterly earnings call matters more than whether families can afford rent, the system breaks down. You end up with empty buildings during a housing shortage. The incentives are completely misaligned with what society actually needs. The big debate is whether this is capitalism working as designed or completely broken. Some people say it's the market doing what markets do, rewarding patient capital, signaling where we need to build more housing. If landlords can keep units empty and still make money, that's just proof they're pricing correctly for long-term value. Others say it's a system that stops serving actual people and now just extracts wealth from anyone who doesn't already own property. Those empty units aren't helping anyone. Not the people who need homes, not the local businesses that need customers, not the city that needs tax revenue. When housing becomes purely a financial instrument, the human element gets completely lost in the spreadsheet calculations. And the people losing aren't the ones making the decisions. They're the ones scrambling to find anywhere they can afford. Nobody's coming to save you here. Your city council might talk about affordable housing, but new buildings take years to approve and even longer to build. Rent control sounds great until landlords stop maintaining properties or convert apartments to condos to escape the rules. And waiting for the market to correct itself? Good luck with that when investment firms have billions in capital and decades of patience. You're stuck checking Craigslist at midnight, touring apartments that smell like something died in the walls. You're competing with 40 other applicants who also make 3 times the rent and have perfect credit scores. The system isn't designed to help you. It's designed to extract maximum value from you. Every month you're choosing between saving for the future and having a decent place to live right now. So here's where we are. Landlords price for the best tenant, not maximum occupancy, because lowering rent resets market expectations across their whole portfolio. Interest rates, property taxes, insurance, and supply constraints all push prices higher regardless of individual landlord personalities. Rent comps anchor pricing to what everyone else charges, creating a floor that rarely drops. Corporate ownership means big players can afford vacancies that would bankrupt small landlords. They use that power to keep rents high even when units sit empty. Housing has become an investment asset first and shelter second. And you're living through the consequences every month when you transfer half your paycheck to someone else whose biggest concern is maintaining their property's valuation for the next refinancing deal. The math works beautifully for them and terribly for you. So here's the real question. Is this system efficiently distributing housing to people who need it, or has it been optimized to extract wealth from renters while buildings sit empty during a crisis? Drop a comment with your city and the most outrageous rent increase you've seen. I want to know how bad it's getting where you live.